SoFi is getting destroyed, but is there another hidden danger headed into this week? Possibly $250 million disaster for SoFi. So we're going to discuss that and the main reasons why the stock is pulling back way, way below from its all-time highs at $32, down almost half in valuation. So very important. You need to listen up and watch this video all the way to the end to understand what is likely to happen with SoFi this week and what you can do to prepare for it and help obviously hedge your portfolio and help you hedge your portfolio and stay protected in this market. If you guys like the video thus far, make sure to click the like button. I'd really appreciate it. It helps the algorithm. And consider subscribing right down below there. It shows that you like the videos and you want to stay tuned when I upload the most recent videos. So with that being said, let's go ahead and jump into it. What is actually happening with the SoFi stock? So Jonathan, why is this a $250 million disaster? So you have to understand first how SoFi operates and its main golden boy, you can say, to success. So SoFi has major exposure to the private credit sector. Now, lately, the private credit sector has been getting hit very, very hard. There's been lots of defaults. It's been higher than usual. And with the private credit being private, it's hard to track necessarily what is actually happening. It's the same thing with SoFi, okay? Now, what you have to understand with SoFi is they benefit a lot from the private credit sector. Okay, but they have a huge advantage on this. So if we look at the loan platform, this has been exceptional for SoFi, but it's at risk. The main loan platform that I'm talking about is Blue Owl. Now, to understand what Blue Owl does, they hold the loan. So they hold the private credit loan, okay? What SoFi's loan platform does is it underwrites the loan for Blue Owl. So they have about $250 to $300 million in deals set up over the next year or two. The important thing to consider with this deal, with the private credit having some really big issues right now, Blue Owl could be at risk of being bought out, going under, and the deals lined up for SoFi for $250, $300 million could be affected. And this is a real possibility. But the main thing you have to understand is SoFi is essentially the broker for these loans. They don't actually own the loans. Blue Owl owns the loans. So it's kind of like SoFi is the realtor when you buy or sell your home. They take their fee and then the homeowner buys the home, the realtor gets the split, which is SoFi. That's it. Everyone's happy. Okay. The homeowner, if homeowner were to default on that loan 2 years later, it doesn't become SoFi's responsibility because they were just the broker. But what it could affect is future deal flow going through SoFi. So it's important to understand how that works. So they make the loans, they don't actually keep them, they're more the broker end. Now, here's the worst case scenario for SoFi. And let's look at the chart here just so you can understand how this all works. Okay, so pulling up SoFi here, you can see we've had a pretty substantial downward trend. Very, very substantial from its all-time highs at 32.60 all the way down here. You can see it closed out on Friday. I'm recording this on Easter Sunday, so happy Easter, everybody. Just want to make sure to get this video out. And it's hitting above the Bollinger Band. So likely to have some downward selling pressure here, or we could see a little bit more of a consolidation here at the $15 to $16 range. Okay. So what is actually happening with this? The worst case scenario in this situation is Blue Owl goes under. They no longer take loans with SoFi and SoFi loses out on a massive revenue stream of $250 to $300 million. Now, that is the worst case scenario. Do I personally think that Blue Owl is going to go under? No, I don't think so. And I do think that SoFi is a smart company. Oops, pop up. I do think that SoFi is a smart company that has already planned different revenue streams, which is very important. Because if we look at over the past year, it's essentially went down to where it was last year, around the $14 to $16 range before it ran all the way up to 33. So what did SoFi do? SoFi just got a partnership for $3.6 billion, and this is a massive partnership to hopefully offset the risk that would come from not having Blue Owl as a revenue source. Now, again, this isn't 100% guaranteed. Like SoFi could come out and say, actually, we're going to lose a bunch of revenue with Blue Owl and, things fall through all the time. But that's what I think is so good with the CEO, Anthony Noto, is he's actually baking in risk in the company. And this is why I love SoFi so much, because they're advancing super quick going into the fintech industry and the future technologies that we need, such as opening up their transfer with using a stable coin and being able to transfer big business transactions instantly as if it was a Venmo and integrating that into the platform. But you have to understand that in the market, there's always two views. regardless of what the CEO is doing, in my opinion, on it, there's always a bear case and there's a bull case. Always those two. Doesn't matter what company it is. So it's going to be the bears and the bulls. Okay. With SoFi, after looking at the short report, it is clear with private credit sector, we could be going into potentially a bear market. It doesn't look like we're necessarily in one completely, even though the SaaS companies and the tech sector has been getting destroyed. Like even SoFi is down over 50% down from its all-time highs. Okay. So with that being said, we could be very close to just a slow rolling market. There's a lot of different factors, the price of oil. But what I can tell you is there's definitely a higher bear case for SoFi than a bull case for a lot of people's minds. Now, when you look at the analysis on this company and we look at earnings, they exceeded earnings. And if we actually look at over 5 years here, they exceeded all the earnings up to its run up to the all-time highs at 33. So this isn't a company that its fundamentals are weakening. It's just that there's a larger bear sentiment right now. And unfortunately, with the company, sentiment has a lot to do with it. This is exactly why I love buying companies who have great market value, market cap, and they're just getting destroyed by bears. Like there's just a lot of bad sentiment. And this is causing bad momentum in the stock. As you can see over the past 3 months, it's been just a steady decline. Once we establish a good support level, we start getting a good run up, I think things will change. And I think we've seen that with a lot of stocks right now that are such a good buy. Oracle, different SaaS companies in the space, down 30, 40% from all-time highs. Even Meta right now, we're seeing a lot of those big players having some heavy drawbacks. Okay. So with SoFi, the worst case scenario, yeah, they could end their partnership with Blue Owl, but understanding where their revenue comes from, I think they are very safe and diversified in the fintech space to keep hitting revenue targets and to grow. So this week with your money, here's what I want you to look at the fundamentals of this company and create your own analysis on it. If you don't want to do all that, I do have a mentorship link down below. So apply to join the mentorship if you want all my stock picks. But understand that this happens to companies all the time. There's always volatility in companies. You have to make your own analysis so you don't just follow news headlines, because every single week there's different information coming out about SoFi and the whole market. So understand you have to make your own judgments. Okay. If you enjoyed this video though, make sure to click the subscribe button. I love making these videos for you guys, but the subscribe and like button are the easiest way for me to tell if you guys really enjoy the content that I'm making. So with that being said, we'll see you guys next time. Peace.